Well, hey, everybody. Steven Sitkowski here. Welcome to this edition of Market Insights. Glad to share a little time together. It is August 21st, and we're getting near Halloween, aren't we? Very cool. Quick reminder that everything that we do here is for educational and informational purposes only. It is not intended to be investment advice. So what's moving the market? Investors await new earnings reports. So I will be giving you a list of some of the key earnings that'll be coming out this week. Interest rates are creeping higher, kind of a direct reflection on the fact that economic news generally is pretty strong. Recognizing it is somewhat bifurcated. People at the lower end of the spectrum, not doing well. People at the higher end of the economic spectrum seem to be thriving. Leading economic indicators slip 0.5%. They were supposed to go down 0.3%. So that was a definite miss. 10-year Treasury has gone up to 4.196. It was down about 3.6%. So it's about a 60 basis point move. Significant. Oil prices was kind of languishing right around $70 a barrel. What to watch this week? Well, the big news today was the leading economic indicators. And you got a bunch of people that like to listen to themselves talk. I can relate. Tomorrow, more Fed speak. Wednesday, you get the Fed Beige Book. So that's their take on the economy and its strength or weakness. We have initial jobless claims like we do every Thursday morning. That's forecasted at 245,000. Last week was 241,000. Then we get the services and manufacturing purchasing managers index numbers. Manufacturing's been in contraction for a while. Services doing pretty well, new home sales. And then consumer sentiment comes out on Friday. So pretty busy news week. Last week's heat map, Netflix had a great week. Nvidia had a great week. Kind of a mix between green and red, a bit more green. 1-year heat map, look at Nvidia, up 241%. Makes me have to keep adjusting my covered calls as the price of Nvidia continues to go up. But on my Nvidia shares, I think my covered call revenue is like $3,000 for the week, plus the appreciation. Can't complain much about that. The only thing that's showing up red are parts of the oil patch and Intel, which I'm now doing covered calls on Intel. I think that price has got to be somewhere near bottom based on the fundamentals. But yeah, it's been a great last year. So how about this year? Dow's up 13.7%, S&P 22%, NASDAQ 22%, oil 5.5. So the big money has been large cap growth, 26.1% for the year. The world is definitely betting on U.S. stocks. Look at that. This is cumulative cross-border mutual fund and ETF flows. There's the U.S., there's Europe, there's China. Earnings announcement. So an update. We're going to get 12% of the S&P announcing this week, 37% next, 24% the week after. Market sentiment has dipped a bit from 49% to 45, but still well above historical averages of 37.5. And bearish went from 20.6 to 25.4. Why? I have no idea. Maybe people are just a bit concerned that the Fed is not going to cut as quickly as we previously thought. So right now there's 13.3% probability, no rate cut in November, 86.7% probability that we'll get a 25 basis point cut, zero chance at the moment of a 50 basis point cut. But I mean, we're still expecting cuts pretty much across the board, you know? So what do we got? 1, 2, 3, 4, 5, 6 cuts for the year, 6 cuts out of 8 meetings. And 1-year sector return. So on the S&P 500 for the last 12 months, this isn't a year to date, up 38.58%. Technology is the big winner at 57, followed by financials, almost 46, utilities, 41, industrials, 40.5, and then sort of as a match to the S&P, communication services at 38.8, and everything else is something below that, with energy basically just at break even. Earnings this week. So tomorrow, Verizon, GM, 3M, say that quick, GE Aerospace, doing covered calls against that. And then on Wednesday, the biggie will be Tesla. IBM could be significant, AT&T, Coca-Cola, Boeing. Thursday, we've got a couple of airline stocks, American Airlines and Southwest, plus Tractor Supply will be announcing. Friday, anything that looks like it's going to move the market, probably not. All right, let's take a look at the charts. Hope all of you are having a splendid day. Let's look at the S&P 500. Good looking chart. S&P at 58.53, almost at an all-time high. And you just couldn't ask for more than that. Definitely bullish. And yet, what was it? 20-something% are bearish. I don't know what they're looking at. And here is the triple Qs. They haven't achieved a new all-time high yet. Kind of hanging around there. All-time high at like 502 or at 495. Everything looks great. And there's a Russell 2000 really underperforming. It was down 1.57% today. So it's kind of stuck. It got right in here. Yeah, at that, we talked about this last week, at its resistance level, and subsequently has pulled back. All right. Overall, things look really good. Hope you're all doing well. And we will see you again next week. Till then, be safe, be blessed. Bye for now.